Hey guys, welcome back to the channel. Today we're talking all about Sofi Stock, what has happened to Sofi Stock, and we're going to be conducting some Sofi Stock analysis as well. My oh my, this stock has plunged another 6% today. That will have some investors getting a bit hot under the collar as the share price is now down to $12.42p, the lowest it has been in well over 12 months. And we're going to have a look at exactly why that is later on in the video. If that sounds like something you're interested in, do please smash that like button, consider subscribing to the channel, and we'll get in there and we'll take a look. Hey guys, welcome into the video. So if you're looking at this today on the Sofi Stock page, you can see the share price is now just $12.41. Lost down 5.9% in a single day, sat right at the bottom of this pretty severe drop here after peaking 3 times in the last year or so. This is the lowest price the share price has been at for over 12 months, guys, and the market cap has shrunk under $10 billion. So that to some people might set alarm bells ringing. People are gonna potentially sell out of the stock and start getting a bit hot under the collar, and if they haven't done proper due diligence, they're going to bottle out and potentially sell, which is going to cause an even wider sell-off, which is not particularly good for the short-term share price. However, what has actually caused this? There's been no extra news from the company. There's been nothing too major in the news headlines apart from the stuff that we already know: a fintech stock sell-off, the growth sectors stocks being hammered as a whole in general, not just specific to just Sofi and fintech, but across the whole growth stock sort of portfolio. And then we also have the federal rate hike, which whenever this gets talked about on investing forums, it is bad news for growth stocks. And as the Fed potentially introduce one rate hike and then there's talk of a next one further down the line, that does damage to growth stocks. So that is not necessarily good, but again, that is potentially something that's only going to get factored in later on into the growth stocks and will eventually tail off because they can't keep increasing rates forever, of course. Nothing fundamentally about the company has changed, right? Analysts are still rating it as a buy. It is well below the low of the average of 8 analysts, which is $22, a high of 28 and a low of 17, currently at 12.42. Some analysts have downgraded they still rate the company as a buy, but they've downgraded their price targets by a couple of dollars, but nowhere near as low as 12.42. No analyst has said that the share price should be below that. And then that leads me on to the next thing that we're going to talk about. So what's happened to the share price? It's come down 6%. It's come down significantly since November, when it was at a nice healthy $22.50, and then it was back in June it was 23, and back in Jan it was $25. All of those peaks, nice healthy big returns for some investors right there. But guess what's happening? Yes, there's been a sell-off. A lot of retail investors are going to be bailing out the company because they don't like to see such red in their portfolio, especially if this has come down from buying in at $20 plus a share. That is going to be like a 50% drop on people's investments, and people get paper hands and they just bottle it and sell out straight away, despite all the really good things that this company has been doing. You don't have to do very much due diligence just to find how successful this company has been at creating new memberships, signing these customers up with a flywheel effect for multiple different companies, and making significant profit and significant progress towards getting its bank charter and the revenue, extra revenue that could bring. So what's happening? Well, the institutions are buying. They see this share price as an absolute bargain right now. So we have Wolf Weiss Magna is buying shares in Sofi, amongst other things, of course, but new purchases, opened a position in Sofi right there, added positions to a lot more, but also reduced and sold positions as well. Then we move on to Point Blank Capital Management. Over the last couple of days or so, exactly the same, new purchases, added new positions in, guess what, again, Sofi. These institutions are seeing this as a massive buy opportunity to get in right at the ground floor. Again, Harbour Capital Advisors once again opens up positions or adds to positions in SoFi Technologies stock. So all the institutions are buying. The retail investors, myself included, I'm a retail investor, are all scarpering out of this stock. They're bailing, they're selling off and doing whatever that they want to do. Me, I'm not one of them. I am holding my shares and I'm going to add even more shares. I thought this stock was a bargain below $20 and I thought it was an absolute steal at anything below 15, and now look at the opportunity that we've got now. It is at $12. That is absolutely insane. And as I say, you have to go back to the 24th of December 2020 to see the share price that we've got now. That was the last time you could buy at this price, and that was right when it was going through its de-SPACing side of things and through the SPAC process. So opportunities there to scrape off the last year's worth of gains for the company and get in right at the very bottom floor, and that still would have returned you a 20% investment had you invested at that price. This company and the share price is only going to grow over the long term. Of that I have absolutely no doubt. Trust your due diligence, back yourself, and either hold on to your shares or buy even more and average down that price to increase your returns over the longer term. Absolutely fantastic company. Yes, fintech has been hammered a little bit. Yes, growth stocks have been hammered, but high quality companies like this do not come around this cheaply very often. Pay attention and potentially load the bus and load your portfolios. I'm not saying commit all your money to just one stock, that would be ridiculous, but do look into this opportunity and invest in it in line with your portfolio diversity. That's all I've got for you today, guys. There's nothing fundamentally wrong with this company. Yes, it's dropped 6%, but institutions are still buying by the absolute truckload. The opportunity is there. Nothing massively fundamentally has changed from today to a week ago. Yes, there's been a growth stock sell-off. Yes, fintech has been hit. Yes, the Fed is potentially increasing rates incrementally here and there. But over the much longer term, forget the short term for the time being, there is a lot of money to be made out of this company. The institutions know it, very wealthy people know it, hedge funds know it, so us as retail investors need to know it as well. Thank you very much for watching today, guys. Absolute pleasure to bring you this SoFi stock information. If you could see your way to hitting that like button and subscribing to the channel, it all helps. It helps me out massively, and hopefully I'll see you in another episode. Catch you later.